Thanks so much for taking some time to join us this evening. My name is Gary Foote. I'm coming to you from Nashville, Tennessee, and I'm joined by Debbie Haberny. So, hi, Debbie.
Hi, Gary. Nice to be here tonight with you. Yes, I'm coming from Charleston, South Carolina. I am a vetted VA4, been with vetted VA going on 3 years. So this is exciting to do this class with you. And hopefully our veterans and attendees can take away some nuggets as far as the VA loan goes. There's a lot of, I think we're going to hit a lot of great topics here, kind of higher level. And then give them the opportunity to ask any questions as we move on.
Absolutely. So our time together tonight, like Debbie said, we have a lot of prepared content to go through and just to give you a real foundation for how to best use your VA home loan benefit. But please, anytime that you have questions, throw them in the chat. We have one of our other members here, Barbara Martin, that's managing all that. She'll make sure that we get your questions and that we can go ahead and answer them here while we're doing this live. Do me a favor too. If you're watching us live, give us a hashtag live so that we know that you're there. If you watch us later on, give us a hashtag replay. This helps us with the algorithm, which most importantly gets this content to more veterans to try to serve them. So we're really excited to be here. As I said before, my name is Gary Foote. I'm a mortgage broker as well as a real estate broker. Debbie has been working in the mortgage industry for quite some time as well. And so we are here to help educate you. There's absolutely no solicitation because that is one of our core principles at vetted VAs. We want to make sure that you have the information that you need to use the benefit that you have earned. So why don't we hop right in?
All right, let's jump in. We've got a full packed agenda tonight, Gary. We're going to go over highlights of the VA loan. We'll get into some eligibility, what types of loans you can get with a VA loan product. We'll talk about the funding fee and maybe some loan costs that would be involved. We'll help you guys look at some entitlement and possibly calculating your own entitlement. We'll talk about some appraisals, home inspections, and then how you can help present a better, stronger VA offer, some tips on that. And then we'll go over some misconceptions that are often associated with the VA loan.
Perfect. I'm excited. Great. So we're going to go through some of these highlights here on the VA loan being a program with low cost, of it being a lifetime benefit. Once you're eligible, it's something that is available to you for your lifetime. So that's important to know that you can use it more than once. That's a common misconception, and we'll talk a little bit more about other common misconceptions towards the end of our time together. It typically has lower rates and better terms than all other loan products. There's a variety for veterans as far as how is this specific product going to be able to serve you. So we can look at for purchases, for refinance, for a construction loan. There's lots of different options. There's lots of flexibility. And it's one of the times where the VA is really coming in to try to help promote veterans getting into homes. So they've really thought this product through. I love it. I know that Debbie loves it as well. I think it's my favorite loan to originate.
Absolutely, hands down.
Absolutely, because it really has that goal of serving veterans. So I'm really grateful that it's available to y'all. We'll look at some veteran protections that are rolled into this specific loan program and tell you how you are able to save a little bit more with that benefit you've earned.
Awesome. So who's eligible, Gary, for the VA loan? Really, I think this slide kind of digs into some technicalities in terms of calculating who would be eligible. But really, I would say this: if you're looking to get a house, purchase a house, and you're working with a mortgage pro, they're going to pull what's called your certificate of eligibility. And that's generally going to let you know if you're eligible for a VA loan or not. I think the only time I've run into kind of grayer areas might be for folks in the reserves that might not quite be pulling a certificate of eligibility yet. And then you could dig into the exact time frame on that. But other than that, Gary, have you ever had any experience where someone hasn't been able to get a certificate of eligibility and had to go this route?
The other two times that I see it show up, sometimes if there's a young active duty person coming in, it may not have been issued yet, and so we can help them to go ahead and submit the various paperwork from command to get that going with the VA. So I have run into that a couple times. And then recently I was able to help a surviving spouse as well. And so,
Right. I was going to highlight that little box there too. That's
yeah.
a very important a note to make out. Surviving spouses are eligible.
Mhm.
And again, unmarried surviving spouses of veterans who died as a result of their service or service-connected disability, spouses of veterans listed as MIA or POWs, spouses eligible for receiving dependency indemnity compensation. So spouses would be eligible.
Absolutely. And that's really the key if you happen to be a surviving spouse that has this question is, are you receiving dependency indemnity compensation? If you are, then most likely you are eligible for this benefit. If you think you might be eligible and just don't know how to get going with the process, feel free to reach out to any of us. We'd be more than happy to help point you in the right direction to get things going and just say thank you for your spouse's service and see how we can support you. We're here to support and help any way we can.
Absolutely.
All right. So as we look at the VA loan qualifications, we're going to look at four different kind of categories. We're going to look at your available entitlement, your credit score, your income, and your residual income. So your entitlement is going to determine, for the most part, kind of the principal part of looking, in addition to the qualifying of your income and your assets, how much home can you afford? So on your first use, there's not going to be a limit that's going to be set forth by the VA. But if you're going to a secondary use without a restoration of your entitlement, then there may be a limit on that. And so there's a calculation that we go through. You can see it up here. It's the county loan limit divided by 4 equals your total entitlement. And then for remaining entitlement, there's additional steps for that. And again, we'd be happy to walk you through that. If you're looking at keeping your existing home and buying a new one, maybe you're getting PCS to a new location, but you want to keep your existing home, you can actually have more than one at any given time, as long as that new home is going to be your primary residence. So you can't use it to buy an investment home, but you can use it to buy an additional primary residence, and your former home can become an investment property. The VA itself, oh, go ahead, sorry.
Oh, just going to mention that county loan limit does change, right, Gary? That changes
Absolutely.
annually. Yeah, so that'll be a calculation that's kind of a moving target there as far as, depending on what year you're looking to purchase.
Absolutely. And not only does it change annually, but it's also going to vary from county to county, right? We have some areas of the country that are a little bit more expensive than others. If you may get orders over to Hawaii or California in specific areas, that may be a higher county loan limit than somewhere in the Midwest, for example. So that's a great way to describe it. Debbie's saying it's a moving target. So it's a moving target, but we can help you. Or you can Google it as well for the current county loan limits if you wanted to figure it out on your own as well. But that's what we're going on, is what's the current county loan limits. So on the credit score portion of it, the VA itself does not have a credit score requirement. But what's important to understand, it gets confusing a lot of times, is that the VA is guaranteeing the loan. They're not making the loan. So it follows the golden rule. Whoever has the gold makes the rules, right? So we're going to look at oftentimes when your credit profile is pulled and we're looking at your credit scores and the whole history of your credit, we have to match what specific lender is going to offer to lend you money based on your overall credit profile. So that's important to understand, is that there are restrictions not set by the VA, but by the people that are actually lending the money at the lender level.
Yep. And these are called lender overlays. Typically in our world, that's what they're known as. And you might hear that term if you're working with a mortgage pro.
Absolutely. All right. So some more of that lender overlay goes into the income category.
Mhm.
So you must meet the lender's requirements of what the income needs to be when you look at your debt to income ratio. So the VA has no set debt to income ratio, but again, the lenders do. However, one of the really awesome things about the VA loan is that oftentimes the residual income is even more important than what your debt to income ratio is. So there's traditionally a little bit more flexibility in my experience, and I'll ask you too, Debbie, where I can usually help veterans get into a home if they have a little bit of challenges with their DTI, and it looks like it's going to be the best decision for them is to own our new home, then we can work together to say, okay, if this is going to serve you, then how can we make it happen? And that's really kind of at the heart of the VA itself, saying, okay, if this is going to serve you as a veteran, you've earned this benefit. How can we help you get into a home? But what do you see, Debbie?
Yeah, so my experience has been, not always, but the DTI, that debt to income ratio, can go quite high, higher than a conventional loan and higher than the FHA allows. So I have definitely done VA loans where the DTI has been higher than I thought would get approved, but since the residual looked reasonable, that loan was no issue at all. So that is a very important metric to discuss with your mortgage pro. Yeah, there's no black or white there, as there is with a conventional loan or a FHA loan. And of course, the USDA loan, which is a much lower threshold allowable.
Absolutely. So one thing I think that might be good to talk a little bit about right now, Debbie, is the difference between an automatic underwrite and a manual underwrite. Can
Yes.
you shed some light on that here? Because I think that falls in here on our
Yeah.
income
Yes.
slide here.
So, there's going to be some factors that when when your mortgage pro is putting together your file, we have this system that's called an automatic desktop underwriter, which basically is like artificial intelligence underwriting the file for us. And if we don't get an approval on that file for one reason or another, most of the time it's because of a lower credit score, possibly maybe some late payments that they've detected. This falls into a manual underwrite category. So this would be where we take the computers out of it and basically we add humans in to manually underwrite the file.
Mhm.
It does I guess involve a little more time and sometimes a little more information that's needed. And the process could be a little bit longer, but it is a great option, especially if your case has reasonable qualifiers that you can allow some mistakes that have happened. Maybe you had a poor credit history, but in the recent years it's been cleaner. So it's a great option for veterans to use that manual underwrite.
Absolutely. No, I'm so grateful that it's there because, again, we all make mistakes at different times. And so it gives us an opportunity to say, okay, I made a mistake. And oftentimes in the manual underwrite process, you may even be asked for a letter of explanation just to say, hey, tell us a little bit about what happened here. We can see that there's a ding on your credit, but what happened. I'm sure a lot of people can appreciate this, but the one that I see most commonly is I got new orders and I forgot to turn in my internet modem and I got sent to collections.
Yeah,
So
yeah.
that's when I see it, quite often. And then we say, okay, well, let's see what we can do to try to help get you in a better situation so we can get you your new home. So just know that there are options to empower you in your home buying journey. That's the most important point from this slide.
Absolutely. Absolutely. All right, moving right along here. There's 5 different loan types for the VA. Did you know that? Well, we've got the purchase, which is again going to happen for your primary purchase of a home, and we'll get into some details on what kinds of homes you can buy a little bit later on in this deck. But you can also do a refinance. It's called an interest rate reduction refinance loan. You'll often hear that called an EARL, and that's where you refinance from your VA loan to another VA loan. And typically people do that because they're going to capitalize on a lower interest rate. So it is a very easy process, and we'll probably talk about that in another slide too. But it's a very fast underwrite, no appraisals needed, and there's very little documentation that's needed for that EARL to happen. We have a cash out refinance loan that's available through the VA, a line of loans. And that would be when you're basically using the equity in your current home and you're going to take out some cash. Maybe you wanted to add a deck, do some enhancements, pay off some debt. You can do that as well. And the nice part about that is that you can that first lien on the property you can take out that max loan amount of 100% of the appraised value, which some other loan types don't allow that. There's also an energy efficient mortgage. I have personally never done one of these. They cover the cost of making your home a little more energy efficient. And that could add up to $6,000 towards total improvements. And then finally, the Native American direct loan. Again, I've never done that one either, but that allows Native American veterans to purchase property on tribal lands, which is very interesting. I did not know that.
Yeah, there's a lot of flexibility, again, like we were talking about in the beginning of our time together. A couple of things that I want to kind of hit on here on this slide is on the interest rate reduction refinance loan. If you look at the very bottom line there in the quotes, net tangible benefit. So one of the things that, again, is really unique about this loan is that the VA is trying really to support you and to say, hey, we're about veterans getting into homes. We're not about veterans getting in over their heads. And so we want to make sure that if you get some type of solicitation for you can refinance or you can get some cash out, well, let's look at this. Let's do a formula. Let's see, is this really as good as it sounds that it's going to be? Or is it actually getting you into a more difficult situation? So the VA is saying, hey, look, we want you to be able to refinance your home, but with the stipulation of just saying there needs to be a net tangible benefit to you. And so I love that part of it. And the reason why I love that is because Debbie and I have the opportunity to do this every single day, probably close to 365 days a year. We're kind of on call. So we get the opportunity to see all the different programs, nuances, everything else that's going on. But people that buy homes or obtain mortgages, think about how many you might do in your entire life. Maybe 4 or 5. Not many.
I use that example all the time, Gary. It is one of those things that you, 2, 3, 4 times maybe in your life. And so it's very easy for someone to be taken advantage of, right?
Absolutely. And so that's one of the, my belief, that's one of the great things about the VA home loan product is it's trying to say, hey, these people earn this benefit by serving our country, back off. So yeah. I appreciate that about it.
Exactly. Don't mess with our heroes.
Right.
Awesome.
All right. So let's talk a little bit about property types. So as I mentioned earlier, it needs to be your primary residence. You must certify your intent to occupy, satisfied by your spouse if you're deployed. It could also be possibly a child as well. No investment properties or secondary homes. Now, there is a caveat on that part because if you were to buy a multifamily home, if you up to 4 units, if you lived in one of them as your primary residence, you could finance that, and it could be an opportunity for you to buy a fourplex, so up to a fourplex. So that's something that is available to you. The other thing that we see a lot of times in the vetted VA group is, as we know, the military is very fluid. There's a lot of movement. There's a lot of things going on. And so someone might say, oh my gosh, I'm buying this home. I'm nervous because I'm supposed to be moving into it. And I'll be darned, like, we just got new orders. And so am I going to be in trouble without being able to occupy the home? We still want the home, but not going to be able to occupy it, right? So when we're looking at this, that key word here is, what's the intent? Right, we see that a lot of times that people say, "Oh, I've met the 1 year, minimum of being able to live in this home as my primary residence, and now I can go ahead and buy another home as a primary." I've met that mark, but the reality is it's not a mark. Like what the VA is saying is like, we understand your life, we understand things happen. So have you fully?
And that's the reality. Things happen. And that's as long as your intention was to live in that house. I was just working with a Navy SEAL who had bought a house, and he got a promotion. It was a tremendous promotion, but he's now required to be on base within 3 hours of being called, right? So he's basically on call. Sure. And so what does that mean for him? That means he's got to move closer to the base so that when he gets that call to duty, he's got to be there, and he can't be fussing with traffic and worrying about all those things. So his intention was to live in that house, but now he's got this new opportunity, so he's going to have to move closer. And so what does that mean for him? Yeah. So again, the intention has to be there.
And one of the things, again, that we look at from the higher level is, and we're not going to talk about it a whole lot tonight, but what this comes into would be like occupancy fraud. So what the question is, again, is not, what is your intention, and is whatever's causing you to move within or outside of your control? Like, that's how I like to look at it. Is it within or outside of your control? And the example that Debbie just gave, like, that was not outside of his, inside of his control. They said you need to be able to report within 3 hours. Okay. Like, you can't say, oh, I'll get on a flight and see you tomorrow. It was a matter of, no, you need to do this. So that's a good kind of guideline. Debbie, you want to hop in on the property types?
Yeah, sure. So different property types, we get, sometimes I get the calls, what kinds of houses can I buy with the VA loan? Well, obviously the single family residence is one of them. That's just your standalone home, along with a multi-family property. So up to 4+1 business unit. And I would say, this is another tremendous opportunity to kind of invest in some real estate there if you can find those that are at a decent price these days. But yeah, up to 4 units. There's a manufactured home or a modular home as well that the VA does allow, single wide or double wide. Condos are allowed. You can also build a home. These are called a one-time construction loan. That's also allowed with the VA loan. We've seen barn dominiums as of recently too, coming on as a new home type, and then tiny homes, which I think those are getting a lot more popular out west. But yeah, these are some of the property types that are allowed with the VA loan. I think the biggest issue sometimes when you have some of these unique properties, like I think there's not as many barnos, there's not as many tiny homes, is just can you find a good appraisal, right? Can you find a comparable appraisal to kind of establish the value of that home? But as long as that you can, as long as that's a possible, then you would have no issue with that.
Absolutely. And one other quick point that I want to jump in here on, Debbie, is, and we see in that little gray box where it says no vacant land, there is an exception to that. If you're buying the vacant land with the one-time close program, you can buy the vacant land along with getting the funding to build your home. So that's something just to be aware of, because I think that gets confused sometimes as well. It's like, gosh, how am I going to do this? I'd like to build my own home, but I don't have the finances to buy the land. Now, the caveat is you can't buy the land now and say, okay, I'm going to buy the land now using a VA loan. You could, purchase it with some other means and say, oh, I'm going to do this part now, and then I'm going to save till, later on to build. It's like, no, it's called one time, right? So we want to get everything going at the same time.
Exactly. Excellent. All right, we're going to dig in. All right, we got a question. Thank you, Geraldine. You're about to buy a property, and your question is there's a type of insurance that would pay off the loan of if my husband would pass? Well, that's a good question. I think that would be covered under a life insurance policy. Am I right, Gary?
Yeah, they do have some specific ones, and typically when you close, you will get a lot of solicitation that comes in the mail, and oftentimes this is one of them. It's similar to the problems we were having a year ago when you kept getting those phone calls of your car warranty is about to expire. It's the same kind of vein with that. And so
Right.
the products do, exist. And so it's not a VA product. It's not a VA backed product, but there are third party products that would cover that. We're not certified financial advisors. And so speaking to someone that is maybe a little bit more beneficial to you in that circumstance. But just as a personal opinion, I really like, Debbie's idea of saying, okay, well, look at the life insurance, option as a possibility, because if you get new orders, if you sell that house, if you, go somewhere else, you still can keep that policy in place, and it would provide the money for various expenses, whether it's a new home, whether it's, in a new location or something else. But that might be something, worth looking into. But there's not a VA product for it, but there are third-party products for that. And you might want to shop that around a little bit.
Right. Great. Thank you. Oops, I'm going to hop back here. I skipped that by accident. So we're going to dive into a little bit of the funding fee, and hopefully give you a better understanding of that. So the VA funding fee, it's a one-time fee that all veterans will have to pay unless you are exempt from the funding fee. How do you know if you're exempt? Well, your loan officer will pull your certificate of eligibility and it should be listed there, but it has to do with your disability ratings. So it is a one-time fee that's paid at closing of your VA loan. It can be paid in full or it can be rolled into your loan. And the fees range depending on if it's a refinance or if it's a purchase. It depends on if it's a first time or not your first use of the VA loan, it'll change. And then, of course, if you're going to put nothing down or something down. So there's a big chart, and your loan officer can help you narrow down what your VA funding fee will be. But it ranges from 0.5% all the way up to 3.3%. And these charts do change as well. But it's a percentage of the loan amount. And based on that, then you would then pay that. And that, like I mentioned, it can be rolled into your loan or it could be paid upfront. It's a one-time fee.
Yeah, and I think something that's important to note on this one is that this is genuinely the only fee that could be rolled into your loan, right? So a lot of times we hear that question about AVA, can I roll on my closing costs? And technically, no. Like, could you get a seller credit? You could if the property appraises for that, and then you could use that seller credit to offset some of your expenses. But the actual funding fee can be added to your loan to increase your loan amount, even if you're borrowing at 100%. So that's something that when I go over loan estimates with people, sometimes I say, well, wait a minute. Why is my loan, 103.3% of the purchase price? And then you look at it and say, okay, well, we're doing 100% financing, we're adding the funding fee to it as well. Oh, okay, that makes sense. So that's something to keep in mind, is that this one can and oftentimes is added into the loan if you have to pay it. The last thing I want to kind of highlight on this one is the pre-discharge claims, because that's one that comes up a lot too. Veterans that do not have a finalized pending rating can submit a memorandum rating via VA Form 268937. So if you're, in the process of leaving the military, what's going to be important is saying, okay, well, when was your disability claim filed? When was it in process? And then that's going to be looked at, because every now and again, there is an opportunity to get that refunded to you, even if you close on your home prior to the time that your disability claim is finalized. But they're going to look at dates and match those things up.
Absolutely. Yep. I recently had that same situation. So it's going to be really important that your mortgage pro is staying on top of, the filing of that. Well, I help my client with that form. So if you have a good loan officer, they're going to help you with that. But yeah. All right. That should have covered that. And moving right along.
Misconceptions. Dun, dun, dun.
VA myths.
These are some of my favorite ones to kind of go through. VA loans are too expensive and veterans should just go conventional or with FHA loans.
This breaks my heart, Gary, when I hear a veteran tell me that they were convinced that, the VA loan was a terrible product and they should go conventional or FHA. It really does. It takes a piece of my soul when I hear a veteran say that.
Absolutely. Yeah, absolutely. And the truth is that that's not the case, and we have the data to back it up. So I think that's the most important thing, is we can help you know your numbers so that you can feel the most comfortable. Like, again, myself, Debbie, anyone that's at VA, we're not endorsed by the VA. We're not given any type of compensation for saying, oh, go sell the VA loans, to these folks. If you sell VA loans over an FHA loan or conventional loan, then there's going to be some type of benefit to you. Absolutely not. We're here because we believe in veteran home ownership, and we believe in the VA home loan benefit being the earned benefit that every veteran needs to know about and needs to know all the details about. So it's just absolutely false when we get into these things, such as it's too expensive. So why don't we look at a couple of these things here? Do you want to, let's see, we just kind of went over the funding fee.
Yep. So it's a not applicable makeup. I think misconception, yeah, the misconception is closing costs. Let's see, any interested party can pay the closing. Okay, so yeah, and this I think we hit on when we were reviewing this particular slide about the closing costs, right? Because
Yes.
there have been some recent changes to some rules regarding this particular topic of closing costs,
Mhm.
where in the past, veterans were not allowed to pay any of the agent's commission or broker fees, and that has since changed. And so there's been a temporary ruling, and that might change again.
Mhm.
That veterans can now contribute towards that. You've probably heard of that, and that's this new NAR settlement that was filed. But yeah, so veterans can now pay part of your realtor commissions. Um,
Something that's really important to me about that topic is, again, is making the connection that the VA is making this change to help veterans continue to be competitive in their home purchases. Like, that's
yeah,
at the heart of this,
that is
because it had been unallowable previously, like up until this year, it was not allowable.
August. Mhm.
And so that was something where, the VA was looking down the pike at this NAR, National Association of Realtors settlement that was happening. And there was a lot of changes. We could have a 3-hour class just on that, but we won't do that tonight. But one of the things is, as the VA was looking at this thing, oh gosh, if a FHA or a conventional or a non-QM buyer comes in and they say, we want to go ahead and pay our agent's commission and submit an offer, and a veteran comes in and says, we want to submit an offer, but we're not allowed to pay that commission. Well, the net benefit to the seller would be more favorable going with a non-VA buyer, right?
Mhm.
Because now they're not paying the buyer's agent commission. Now, there's no ruling, there's no law, there's no forceful action saying you must pay the buyer commission. You can absolutely ask for concessions. You could ask for the seller to pay it. And this is just a negotiable fee. It's always been a negotiable fee, but it's just something that has been misunderstood and was taken a little bit for a ride, in my opinion, the last couple of years. We're going to see some more activity on this. The DOJ actually just said, "Hey, we're not done with this yet." Late last Wednesday night before Thanksgiving, and there's going to be more developments in this.
For sure, that is definitely going to happen in this upcoming year. So, it's another one of those moving and evolving rulings. So, all
Absolutely.
right.
And I think with that, that would be a good point, just real quick, Debbie, to kind of jump in on and say, this is where our borrowed motto for Vetted VA of trust but verify comes in, right? Because things are continually changing. And so there may have been someone who very much wanted to support a veteran and just doesn't have the most up-to-date education. And so they're saying, absolutely, you cannot pay that real estate broker fee. They're trying to take advantage of you, but they may not have seen the temporary update that this is allowable right now. So it's just an encouragement to make sure that whomever you decide to work with is really up to date on everything that changes, because there's continual flex when it comes to home buying.
Absolutely. All right. Digging in a little bit to what's involved. What do you expect with costs as far as when you're trying to buy your home? Um, you know, the VA loan is a wonderful product for many reasons. One of the biggest ones is there's no down payment required. However, you should still have a little bit set aside for your closing costs. Your closing costs are going to be funds that are required to cover title or your attorney, depending on your state, appraisal, um, your home inspection. Some homes have sewage, or I'm sorry, a well and septic. That's what I was trying to get to. So you're going to have some inspections that you might want to do. They're elective, but you might want to do that, as well as transfer taxes, insurance. Property taxes. These are fees that you're going to have to pay, whether it be prepaying your insurance or escrows. So, we say typically you're going to want to set aside 3 to 6% of whatever that loan amount is so that you have enough funds to close. And again, appraisals can range. I have not seen an appraisal as high as 1,500. I imagine, a more complicated property could get that high. I'm seeing appraisals kind of in the range of 600 to 700 these days. And then inspections right around 500. And then your earnest money, that's the funds you'll put down when you go under contract. And that kind of lets the sellers know that you're serious about your offer. And that, again, it would depend on the market. I think here in my area, we're seeing things around 1% of the purchase price. So how about you, Gary? In your area, do you see that fluctuate?
Yeah, it's going to depend on the purchase price, that you're looking at. But this is, again, a great kind of point to stop on for a second, because one of the things that Debbie showed you was our objective in doing this is saying, well, how do you put together a solid offer? And this is one that I think when I put my real estate broker hat on, that makes me say, oh gosh, that's not going to be a strong offer. Because what you're essentially saying with your earnest money deposit is, I have some skin in the game, right? So you're, whatever that might be, if it's $1,000, $5,000, any amount, again, it's negotiable. And I would defer to your real estate professional to say, what's a good amount that we're looking at in this area, for an earnest money deposit? Because in the beginning of a real estate transaction, the majority of the risk is on the seller. So that's an important part to understand. The majority of the risk is on the seller. The seller is saying, okay, I had a for sale sign in my yard. I had a for sale listing in the MLS. And now you want to go ahead and submit an offer. Thank you so much. I'm excited. We've agreed to terms. So I'm going to change that to say that it's either pending, and you can bring a backup offer, or I'm going to say, you know what, we don't want to show the house anymore. We're done. And, we have our buyer. And so here we go. So during that time, you're doing your home inspection. You're getting the appraisal. You're getting any other inspections that you need to have done. You're getting your full underwrite. All these things are going on during that time where you could possibly back out. And the risk is to the seller, because they have lost the opportunity to keep the home active on the market for another buyer that may be a little bit more solid, in the sense of saying, we're committed to this specific home, right? So that's what happens. Now, once your contingencies are completely removed, then there's a swap. And now more of the risk is to the buyer than to the seller. And once those contingencies are removed, that's when your earnest money can go into play, because you've had all your inspections done, you've had your appraisal complete, hopefully, you've had your conditional approval received, you have all these things happening. And then now you say, okay, we're all in on this. So if we walk out of this transaction now that we've removed all of our contingencies, then that earnest money, Mr. and Miss Seller, goes to you. That's how serious we are. So that's where it comes in, where yes, technically you do not need to put down an earnest money deposit, because you can get 100% financing. However, if there's a competitive market and you're seeing one person that's putting some money in and someone else that's not putting some money in, then you may not be the most competitive offer. So it's just something to understand, that sometimes the things that we can do might not always be the best thing to do. So it's good to have a conversation with your real estate professional to see exactly what's going on in your particular market. Because I'm sure Debbie says the same thing. I've seen plenty of homes that have had zero when the home's been on the market for a few months and there's no bites, and they say, okay, great, we got a live one, we'll accept, no problem. But then there's been other times where it just goes up and up and up and up and up. So
that's a great perspective. I love your agent hat on that one, just to kind of give some insight to the benefits of being and putting in making your offer a little more competitive. So that's some great insight. This is a fun one, Gary. VA loan entitlement and calculation. Well, what we're seeing here is a little snippet of our certificate of eligibility, right? So this is what we look for as mortgage pros when we're trying to figure out, what your eligibility is. And so we can download this off of the VA portal, and you also have the eligibility to download this as well. We can probably post a link in the comments, but there is a link for you guys that you can access this. But this is basically where we look for to make sure that you have full eligibility. And if not, then there is a calculation that we do to calculate how much your remaining eligibility is. And again, like Gary mentioned before, the VA does not lend money. They basically guarantee that loan, and they guarantee that loan for 25% of the balance. So, yeah, that's what we're looking at here, a little bit of the entitlement.
But two things to keep in mind, if you end up pulling your own certificate of eligibility, which you can do, we see this sometimes in VA with the question and it's saying, so I pulled my certificate of eligibility and it says here that I have $36,000.
Yes.
I can't even buy a car for $36,000. How am I going to buy a house? And so that's something where the math doesn't math. And so as we're looking at things, the $36,000, it essentially means this is your first use. Like you have your full entitlement available. From the VA's perspective, there's going to be no limit as to what they will guarantee. And now they're going to defer over to the lender to say, okay, what do you qualify for? Right. And so that's what's going to go on there. And the other part where it says the veteran's basic entitlement is 0. So that's important to understand too, because we have basic entitlement, and then sometimes you may see the words bonus entitlement or second tier. And so just because you may have no basic entitlement left doesn't mean that you might not be able to purchase another home with 0 down. So it's important to be able to understand and go back to that calculation from a couple slides ago. We're saying, how do we figure out that entitlement that's available to you? It's that formula. And again, we're happy to help you with that. Anytime if you might need help, you can search it in the VA group. We have the formula in there several times. But just want to make the point that don't be scared if you see 36,000. You're like, I can't find a house for that.
Right.
Or if you have 0, be like, wait, I use it all, because there's still a lot of opportunity. It's just a little bit confusing in the way that it's written out here on the certificate of eligibility.
And the beauty of this VA loan, like you hit on earlier, Gary, is you can use this your entitlement as long as you have remaining eligibility. You can use it to buy multiple properties, whether that be 1 or 2. I actually was just working with a veteran and she had 3. So
Awesome.
she was buying up in Pennsylvania, where I guess it wasn't that expensive at the time. So, but yes, a great opportunity. So
absolutely.
Now this next slide, we're probably just going to skip right over it. I think it's a little in depth of what we wanted to get into tonight, and it might not be the clearest way to calculate that. But like Gary mentioned, if you're curious about what your entitlement is, any of the moderators on the VA page will be happy to help you calculate that and share those numbers with you.
Absolutely. Sometimes we nerd out on the challenge too.
I know, right? Faster. Yeah.
Ask, please.
Please ask.
All right.
All right.
Debbie, I see a couple questions here in our chat.
Okay.
So the first one, I'll ask it, and then do you want to hop on it? Does the earnest money go toward the house price at all?
It can. Sure. It can go towards the loan amount that you have due. So yeah, it could go towards your closing costs, or it could go if you have enough seller concessions where you don't need it to offset your closing costs, then sure, it can go towards your loan, or you can get it back at closing. It's the only, I think, loan that I know of that you can actually get a check back at closing. And I have seen veterans get that back at closing as well.
Yeah, absolutely. No, that's an important part. So yeah, it's in there again for that transfer of risk. And so you're trying to make the seller feel a little bit more comfortable by putting an earnest money deposit down. But if you're doing 100% financing and you have seller concessions to be able to close everything, you can get that money back. Because again, that goes back to that earlier comment that I made where it's not required. It may be recommended to keep you competitive, but it's not required. And since it's not required, it can come back to you. Perfect. I think we have one other question. There it is.
Is it better to find a realtor that was worked with VA loan buyers before, or does that really matter when it comes to a realtor? Listen, I will say 100%. Finding a realtor that is knowledgeable and knows the VA loan is 100% better than working with one that has not worked with the VA loan. You're going to find an area of expertise in knowing how to negotiate, how to leverage concessions. So getting that team of your mortgage pro and your realtor both on the same page and being able to work for you, they are your advocates in this process. And so it's going to be really important that you're choosing people that are knowledgeable about the product and how to leverage it for you. Yeah.
Absolutely. And unfortunately, like one of the reasons that vetted VA exists and that we have this class tonight is because there's so many urban myths about the VA loan program. And it's been passed down through generations of real estate folklore, right? So there's so many things that kind of come down the pipe that people believe because, oh, a senior agent told me this, who was told this by another senior agent when they got hired, who was told by another senior agent when they got hired. And maybe something like that would have been true. Like, for example, I don't know if you've been here the whole evening with us, Shannon, or not, but like when we were talking about buyers not being able to pay real estate commissions, like that's changed. So if you haven't been educated as a real estate professional and you're not up to speed, like, oh no, I'm sorry, you're just not going to be able to be competitive. Maybe you should look at doing a conventional or FHA loan so that you can pay those real estate commissions. Well, there's a lot of problems with that because now, if you're looking at an FHA loan, you're going to have to come up with 3.5% minimum of your down payment. You're going to have to come up with the money for the real estate commission. You're going to have to come up with your cash to close. And that can add up really quick. But on the VA side, you can come with zero, down, and you might have more cash flow to be able to cover that. So just kind of piggybacking on what Debbie said, it's so important, and I think both of our opinions really, to work with someone that is understanding the VA loan process. Just a quick kind of, for instance, I had to get on a call and speak to a managing broker the other day that misunderstood something about the VA loans. So they said, "Oh, we're going to go ahead and we can't move forward with this VA buyer." And I said, why is that?" And they were starting to argue, with me with good intention. They don't want to, break any type of guidelines, but they were quoting guidelines that had changed. And
Mhm.
so we're able to say, "Hey, here's the current guidelines. Let me go
Yeah.
ahead and send you a snippet of that, and you can feel comfortable. And then now let's go ahead and move forward." And we were able to save the transaction for the veteran. So it is important to make sure that you're working with people that do this routinely, because if you're not, they might not be aware of all the guidelines.
Yeah, I agree. It's interesting when you hear stories like that, Gary, of the misconceptions that are out there. I was just maybe 2 weeks ago, last month, working on a VA loan, and we got the appraisal back within, I don't know, less than 10 days. And the realtor was just blown away. She couldn't even believe that I had it back. And I was like, well, this is kind of normal timing here for this area. And she said, I remember the days when a VA loan would take 40, or I'm sorry, a VA appraisal would take 40 days to come back. And I thought, yeah, that must have been in like 1982 because I've never seen that happen. So just interesting, and interesting how those misconceptions kind of really linger, and then they really deter agents from wanting to work with veterans,
Mhm.
unfortunately. So it's a huge obstacle, and that's what we're doing, right? We're here to help overcome that stigma of the bad things about a VA loan because it's an amazing loan. So,
Absolutely. Perfect.
well, this is a fun slide. It's basically filled with just different kinds of forms that maybe at one point in time that you might be asked to obtain for your your mortgage pro. I've had to deal with some of these. Now, you're not going to have to use them all the time, but a DD 214, statement of service. Of course, you'll definitely need to provide your LES or bank statements. Um, Taxes, I would say really more your W-2s than your taxes. Um, I've every now and then been asked for the VA disability award letter.
Yeah.
Again, your reserve, that might be for more, reservists. Um, and then of course your COE, that's a hands down. I would say if your mortgage pro is not pulling your COE within the first hour of talking to you, then you should start interviewing other mortgage pros.
Yes.
So
100%. Yeah, 100%. You want to make sure because um, you may know for a fact that you served and you were discharged honorably and you're ready to go, but maybe you used your entitlement once before and you're buying a new home and you had sold the previous home and it hadn't been properly restored. Like I do see that from time to time. And so when you get in there and get the COE updated, and it doesn't take long, you just need to know how to do it so that it doesn't become a problem in the 11th hour. Like you're ready to close and then they go to pull your COE and they're like, oh, actually, you don't have enough entitlement for this with your bonus entitlement. So
I've
can
heard the
you
horror
send
stories.
over $200,000? And
Yeah.
you're like, what?
Yeah.
So yeah, 100%, Debbie. I'm in agreement with you. That should be right away for sure. For
Yeah.
sure.
All right.
All right, the lender is responsible for developing all credit and income information. So, what to expect? Your accounts to be reviewed, money in, money out, funds for closing costs verified, income verified, proof that qualifying income will continue, and savings and investment verified. So, this is important because sometimes people, I get it, we all want our privacy, and I can guarantee you though, when the bank statements come in, we're not going through and be like, ooh, like somebody went wild on Black Friday here. Look at all these Amazon, things that came through. And what you get, I'm not going to call you and ask that, but what are we looking for? We're looking for this stabilization of your income. We're looking to see sometimes there's a mismatch between credit and within your account, right? So, for example, there may be a car loan that's not showing up on your credit profile, but on your bank statement, the last 2 months that you've submitted to us, we see that you've been paid in Ford Motor, and so there would be a question like, well, wait a minute, do you have a car loan? And so we have to make adjustments to your debt to income ratio. So that's what they're looking at. They're not trying to, overpry and get into things. And full disclosure, I had this conversation with my mom when I was helping her to buy a house, but she just got frustrated and she was like, I'm so frustrated. I've given all this information and this is ridiculous. And I just said to her, I was like, Mom, you have to think about this. Essentially, you're asking a stranger that you've never met to lend you hundreds of thousands of dollars based on some papers that you're sending them.
Yeah, it's true.
Oh,
It's a big risk, right?
it is. It
For
is.
for these investors, and so they're just going to want to do their due diligence to make sure that basically trust but verify that what you said in your application is actually what's going on in your financial landscape. So,
Absolutely. Absolutely.
all right, moving right along to credit. Again, we mentioned earlier in an earlier slide that there is no minimum credit score with the VA loan, which is true. However, your credit does matter. And each lender will establish what their minimums are. Some lenders won't go past to 640, some 620, some 600. We have some that go into the 500s, but those are called overlays again, and that'll be different depending on which bank or which lender you work with. The most important thing I would say when it comes to credit is, I would say the worst thing that you could do to your credit is not pay bills on time. That's
Absolutely.
one thing that'll really hurt you. So, more so than anything, I think, sometimes running high balances might hurt this and that. But when you have late payments, it really shows the bank how you can manage your own lines of credit. And so they don't want to see that, especially if it's a larger, like a mortgage payment. So
Mhm.
try and do your best to stay on time. And if that means getting set up with an automatic payment system, then I'd highly recommend that. But that's going to be something that'll really deteriorate your score if you're not paying those bills on time.
Absolutely. If there's anyone watching this now or in the future that it's like, gosh, I think my credit might be a little challenging, we have two really great resources available to you on our website, fully free. Like there's no commitment or anything like that. It's just to try to help you to get a home. So we have the Go Bag. And so in there, there's lots of good information as well as an opportunity to do some credit monitoring. And then we also have a full course on credit. So you can go through that as well and understand credit what is it? How is it extended? What helps it to improve? What helps it to decrease? So you can go to vetva.com and look on the veteran section in the dropdown, and we have those two items there for you. Debbie, I wanted to ask a quick question here. So, because I think it's a pertinent one. You mentioned a couple times about lender overlays, right? What is a lender?
A lender would be I'm sorry? Yeah, like a lender would be a bank or somebody who will fund that loan.
Okay.
Mhm.
And so, so like when you say that there's different lenders that have different credit criteria, if I was going to apply for a loan with you, and I applied for the loan, and you said, "Oh, Gary, your credit came in at 575, right?" And so I'm just stating a fact and letting you know that. I'll send you over a copy of your consumer credit report. And then my question to you is, okay, Debbie, is that something that you're going to be able to give me a loan on, lender? Are you going to be able to do that? What
I would
what
say
avenues do you have?
yeah, so there's when you're talking to mortgage pros, there's a couple different kind, right? So there's mortgage brokers, and then there's retail mortgage loan officers. And so I think everyone's going to have different products available. So depending on who you're talking to, I can't really say what retail officers go. I'm a mortgage broker personally, so I have over 50 different banks that I work with. Okay. And so each one of those banks are going to have different programs, different loan programs that they're offering. So, and different overlays. So some of those banks are going to allow me to have a no score VA loan. Some of those are going to allow me to go down in the 580s. Some of them don't want to touch loans that are under 620. So it's just working with that mortgage pro who not only has the option to do these loans, but also can, knows what the products that these lenders are willing to offer as well. But again, retail has fantastic lines of as well. I'm not saying any one is necessarily better than the other. I'm just saying that there's different channels when you're talking to mortgage, and that's why it's sometimes it's good to talk to 1, 2, 3 different folks from all lines and see what best suits you and what your challenges are in terms of getting that loan.
So if that scenario that I just gave you, and you were to say, you're like, "No, Gary, I can't get you a loan." Does that mean I won't be able to get a loan anywhere, or should I possibly shop around a little bit?
Yeah, I would definitely recommend shopping around because one person can't do it does not mean anybody can do it. Again, the VA does not have a minimum credit score, so there
Awesome.
are products available.
Okay, thank you. I do see another question that
Oh,
came in here. Do you see them?
why I'm not seeing questions? I don't know.
I'll read it to you. I'll read it. Here we go. So it's, what's the approximate interest for VA loans? So that is a great question, but you're not going to like the answer because the answer is it's going to be variable. It's going to be fact dependent on exactly what's going on with your specific financial situation. Your credit score is going to have an impact on that. Just like we were talking about a minute ago, where Debbie was saying, I may be able to get you pre-approved at that 575, but that 575 loan, there may be some additional fees that are going to be put into the loan in order to go to a lower credit score, right? And so it may be a more expensive loan. And so we're going to be offsetting that a little bit. So unfortunately, we can't really ask that without having an application. This isn't like a bait and switch or want your information. It's just a matter of, we wouldn't be serving you to say, "Oh yeah, this is what it is," because that's really not true. Like, until you have an application and until you have a loan estimate, and truthfully, until you have a locked loan estimate, you really don't know where your interest rate is going to be. So
Yeah,
it's
kind of a
important.
general, maybe a small range. But again, I get this question all the time. What are rates today? And it's like, ask me in 5 minutes, they'll probably change. But yeah, it's one of those things where, you'll kind of have a general idea as you get that application filled out. And then once you have a contract in hand and you're able to lock that loan, that's when you're really going to start talking in terms of what that rate sheet looks like for that particular day and strategize with your mortgage pro as far as what you want to do, whether float or lock or, yeah.
Absolutely. And last thing I'll say on that is if you're an inquiring mind, like I am sometimes, and you want to get more into the weeds, in our Vetted VA group on Facebook, do a search in Vetted VA for Hammer, Hammer. Hammer does weekly updates on what affects credit rates so that you can get the behind the scenes and understand, like, okay, now I understand what's going into this, what's affecting it. So that would be something if you want some behind the scenes inside baseball on how this all comes together. Searching for Hammer's videos would be a great way to do that.
Awesome. All right. We are right at the 1 hour mark, and we've got about maybe 10 more slides left, 8 more slides left. So let's move this right along. We're going to jump into VA loan appraisals.
Perfect. So on the VA loan appraisal, just a couple things. It needs to meet the minimum property requirements set forth by the VA, looking for safe, structurally sound, and sanitary. So that's something that's important. The VA appraisal timeline, you can look that up. Every geographic region is going to have a little bit of a different timeline that they're looking at. So you can look that up if you wanted to see what the turn times are as far as that goes. The important part about it is that there's this misconception a lot of times that VA appraisals are tough, take way too long, and will undervalue the property. So Debbie was just talking about that a few minutes ago about one of the appraisals that she recently had. Now the VA appraisal has 2 safety guards in it. So one is called Tidewater, where the appraiser comes out and he or she will say, hey, I did my research, I went and saw the home. I'm not able to understand how you guys came up with the value for the purchase price. Is there any supporting document that you can provide to us, specifically comparable homes, where I can look and see maybe I missed something because I'm imperfect, just like we all are, and I can look at that. And so oftentimes there's a new notice of value that is issued based on that. I just had one of those last week. We didn't come, the initial appraisal was called for Tidewater. We got the listing agent and the buyer's agent and the buyer on the phone, explained the situation. The listing agent and the buyer's agent worked together, provided some more comps. The appraiser looked at them, said, oh, I missed these. And then the appraisal actually came in $2,000 more than the purchase price. So they're coming in to some equity there. So you have that. And then you also have a reconsideration of value called an ROV, where you can apply for that directly with the with the RLC, stating your case as to why this home is important to you.
Yep. And I think you're hitting that right on the second slide here. So the appeal process, if that Tidewater fails, would be that reconsideration of value. And that's basically where you have the veteran write a letter and basically say why they feel like the value should be more. I would say this. If you get an appraisal that comes in under value, don't be discouraged. I mean, these are very seasoned in most markets, experienced appraisers. They're using information that they've collected, and they're establishing a value based off of that. If they truly believe that the value does not exist, this might be an opportunity for you to negotiate the price again. And so it's not necessarily a terrible thing. Again, the VA loan is structured to protect the veteran. They don't want you to overpay for that house. So getting a good value is, although this can be a frustrating process, I would say, certainly, no one likes it when the value isn't there. I've had veterans make out because the sellers are just like, well, then drop the price. We'll just sell it for what the appraisal came in at. And then everyone walks away is a win-win. So
absolutely. Great.
Let's talk quickly about some home inspections that can happen.
So I think the most important part to understand about this slide is that a home inspection is not an appraisal. And so that gets confused quite a bit. So the appraisal is ordered by the lender through the VA, and then a VA appraiser is assigned. The VA appraiser goes out and they're looking for those 3 items that we discussed earlier, as well as what the value of the home is. So they're not doing a thorough investigation of all the systems of the home. So they're looking at, and the opportune word here is minimum, the minimum property requirements. So your minimum property requirements may be different than someone else's. So that's where the home inspection comes in, because the home inspector will come in and go through all the systems. They're going to, depending on what package that you buy. So you're going to look at the HVAC system, the plumbing system, the roof. They're going to, there's a crawl space. They may call it the crawl space. I always recommend getting infrared imaging because the limit of the home inspection is the home inspector can only investigate what he or she can see. So it's a matter of saying, okay, what tools can I pay extra for you to use in order to see more things? So that may be an infrared gun. It may be a scope to get down through the plumbing systems and things like that. So the home inspection is going to be much more thorough. And we get this question a lot in Vetted VA, and almost always the response is, this is the one area where you don't want to be cheap. If you can afford to go a little bit more expensive with a high quality home inspection, this is going to pay dividends because this is your opportunity to know the condition of the home, and it's going to give you the opportunity for future negotiations as to any repairs that need to be done, or do you want to walk away from the home because you don't want to take on that project.
Yep. There's nothing worse than, sinking so much of your emotion and finances into a home and only to find out that there's much, much, much larger issues that were never discovered in the process. And I can't imagine what that would go through, but that's just a terrible thing for some people. So getting these home inspections is going to be critical. Not a time to skimp on those savings if you can avoid that. All right. And we've been giving you all kinds of tips tonight on how to present this strong offer on the VA loan. Getting a pre-approval is going to be step number one, right? So that's basically when you talk to your mortgage pro, they've pulled your credit, they've gone through your income, they've gone through your residual income, they've looked at all your credit score numbers, and they're giving you an approval. It's going to be a number that says, hey, you can afford this house, and also, what you're comfortable paying monthly. And so that's going to be a really important discussion to have with your mortgage pro. Getting that pre-approval is key. It's the golden ticket when it comes to house shopping, and any realtor is going to want to see that pre-approval prior to taking you around to look at some of these houses. Know your MRPs when house hunting. That's your minimum property requirements. We can post a link in the comments. Maybe Barbara can help us out with that. There's
Sure.
a link from the VA handbook as far as what are minimum property requirements when house hunting, just so you're familiar. But again, this is just ensuring the safety, the sanity, and the structural soundness of that home. Railings, they don't want to see wood rot. They don't want to see any sort of paint peeling or chipping. So these are minimum things, and typically they're relatively easy to get fixed. Earnest money, Gary hit really hard on this one, which is making your offer competitive by putting some skin in this game to make sure that the sellers know that you're interested and you're serious. And then you could also talk about the appraisal gap, which would mean if that appraisal does not come in, are you willing to come out of pocket to make up for that? Again, we have Tidewater, we have reconsideration of value, but if those things don't work out, are you willing to say, listen, I don't care. I want this house so bad that if it doesn't come in, I'm willing to pay that difference.
Mhm.
Getting prepared for underwriting and closing. So, we always say avoid large purchases, no moving money around, no large cash deposits, no funny business. You're getting ready to go into underwriting. Keep your bank statements as clean as possible. Get your funds ready for close, and make sure that if you have any questions about any financial transactions, you fully disclose those to your mortgage pro so nobody's surprised at the end, because that's never fun. And then selecting that A team, which is your realtor and your loan officer, who are well rehearsed in the VA loan and can help strategically help you in getting that loan. I will say, before this NAR ruling, I was working with a client who was purchasing a home. The sellers were only willing to offer 2% of the buyer agent commission. She wanted 3%. So she added that 1% into a addendum that was not provided to me. But when we came to closing and balancing with the attorney, I noticed that the attorney put it on the CD. And as I was reviewing the CD, I said, well, where did this extra $8,000 come from? And the title said, well, we had an addendum that she never gave. And I said, yeah, she's not allowed to add any fees to that agent, to that closing disclosure. So at that point in time, I called the agent to let her know that she wasn't allowed to charge that to her client. And she was very upset. And, she had some words about the VA loan. But the most important thing here is she had told her clients that they needed to sign this addendum to pay her this 1% difference. But me, knowing the laws, the rules of the VA loan, I was able to save my client this $8,000. And when I called them to tell me, that they're actually not allowed to pay that per the VA loan, and so the agent was going to waive that fee, they were just elated. So these are things that it's really important to work with mortgage pros and realtors that are really familiar with the VA loan, any obstacles. So we have your back. Again, we're your advocate, and we're going to look out for you in this process.
Absolutely. All right, let's do speed round. Facts or faction? Factions? I hope not. Fiction or facts?
Fiction or facts. All right.
Veterans aren't strong buyers because of the 0 down payment.
Fiction.
No down payment for veterans with full VA entitlement. No down payment is an earned benefit for their honorable service and not an indicator of a veteran's financial worthiness. Oftentimes, I'm sure that you qualify a lot of veterans that have great financial profiles, and instead of using the money to put a down payment, they're going to use that 0% benefit, and they're going to use that money that they would have put as a down payment to invest in something else to get a better return. So absolutely false. All right, fiction. VA loans are difficult to process and take longer to close. And VA loans.
That's not true at all.
No.
My experience has been it's one of the easiest loans to close, hands down. You set the file up right, it's going to be a super clean underwrite. So definitely not true. All right, let's get on to the second slide. Fiction. Sellers must pay all of the veteran's closing costs. All other fees are negotiable and can be paid by any interested party. Right. So this is a recent change here within our ruling. But yeah, veterans can now pay some of that as well. Fiction. VA loans are denied at a higher rate than any other mortgage. Not true at all. VA loans have the lowest denial rate according to HMDA data.
Yep.
And then VA loans are expensive for veterans. And not true at all. We've got no mortgage insurance. We've got lower rates, and IRRRLs can be one of the simplest form of refinancing that loan.
Absolutely. So here's some additional resources for y'all. If you'd like to get more information on what we have to provide to you at no cost, it's all free. In addition to direct links to the VA Lender Handbook and VA circulars, you can go to benefits.va.gov for some late night reading if you're so inclined. It's a little dense. It's meant for professionals, so that's important to understand. That those items are meant for professionals. They're not exclusive, so you have access to them, but they're worded for people that are in and out of these guidelines each and every day. So if you, it's a little bit confusing, that's okay. If you want clarification, you can say, hey, what does this mean? And we'd be happy to go through it with you. The VA Regional Loan Center, you're probably familiar with that already, so that's available to you. We have our Vetted VA Facebook. Some of you are watching us from there, so thank you so much for tuning in tonight. And then last but not least, we have our Vetted VA LMS, which is our learning system. So like I mentioned before, we have the credit boot camp, we have a PCS course, we have the one-time closed construction course. So we have a lot of different things there. It's not on here, but we also have a YouTube channel. So make sure to subscribe to that too, because we do videos. We have a TikTok channel as well.
Too. Yeah. I haven't been on there too much, but we do have a TikTok channel as well. Yeah, all the things. So tons of great information, tons of great resources. Of course, I mean, there's just such a wealth of knowledge. Any veteran I come across, any realtor I come across, I'm always like, join our page. So much good content.
Yes.
And of course, the Vetted VA network. Here we are across the country. Look us up on the map. Find the state you're in. Find a Vetted VA pro and reach out for any state-specific questions that you might have. And if you would be so kind as to scan that QR code and take a survey, we would much appreciate that. Well, this has been a ton of information. So fun, Gary. We had a lot of really important topics tonight.
Absolutely.
Yeah.
Yeah.
It was great, and I think, I hope our audience walked away with a nugget or 2 today. And of course, we're available, on Vetted VA, for any additional questions that you might have. Oh, here's another one.
Ooh, woohoo.
Yeah. Is there any housing assistance, like subsidy, for buying a home? You know, I
So that's going to be determined mostly by your locality, like what's available to you. The
yeah.
first thing is to remember is that with your VA home loan benefit, there's zero down.
Mhm.
So just right there, there's zero down, so you don't have to come up with a down payment. And then talking to a real estate professional, depending on where you are in the country, right now could be a really good time to buy because in some areas that are a little bit slower, seller concessions are available to be able to cover a lot of cost. I had a veteran
Yes,
today.
definitely seeing a lot of that in our area. A lot more seller concessions are being offered, so,
So
um
it truly is possible, depending on your market, to walk into a home with $0, believe it or
yeah.
not. So, but it's going to depend on your market and your situation. So definitely connect with somebody. But that's answer one, and then answer two. Yes, there are some resources available, but that's going to be geographically what's the word I'm looking for? Available.
Yeah, perfect. Well, y'all, that's a wrap. It was our pleasure, and, stay safe out there.
Thank you so much. We appreciate y'all, and we'll see you. If you haven't joined Beta VA on the Facebook group, please make sure that you do so if you're looking at this from another source, because we would love to continue the conversation. We're here to help.
Bye.
Hi, everybody.